Let's do this, guys.
Welcome to the club. Yeah.
Yeah, looking forward to it, guys.
All right, I believe that we are live. Everyone, thank you so much for joining us today. Thank you, GDA Capital and Secure Digital Markets, for putting this together. And thank you to all the speakers who have come, and to Tally and the rest of the team for putting it together. My name is Joaquim Miro. I'm the head of growth at GDA Capital and Secure Digital Markets. Have been involved with the business since inception, and have been in the space since 2016 as an early investor and VC investor myself. Today, I am joined by two elites in the legal space. We have with us Toufic Adlouni, based in Montreal, and James Asaad. I'll let you guys introduce yourselves quickly. We only have 30 minutes, unfortunately, for this panel, so I do have a hard stop in 30 minutes, so we'll jump right in, but I'd love if you guys can start with a small introduction.
Sure. You want to go first, James?
Absolutely. I wouldn't profess to be an expert in the legal field, but I'm fortunate to work with fantastic lawyers like Toufic and his firm. So I've got a little bit of perspective that I could share. But my name's James Asaad. I'm located here in downtown Toronto, and want to thank GDA for putting on an incredible event. It's been a fantastic morning. Lots to learn. So there's a lot of good things going on, a lot of great experts involved. Congratulations, guys. And I'm the president and vice chairman of Ferrari and Associates Toronto, which is an insurance brokerage, and we insure public and private companies around the globe, listed in Canada, London, New York, the U.S., globally, and we do everything from traditional financial institutions to mining, fintechs, and we do Web3 companies that are public and private. As well as other crypto or digital asset-based companies. And actually, we were very fortunate to facilitate the first insurance policy for a digital asset-based business in cryptocurrency. So it's an incredible feat for the old industry, insurance. It can't get much older than that, and the new industry being digital assets. So we're very pleased to be a part of that, and that's given us a unique experience and lens on what's going on, both commercially and from a regulatory perspective.
Awesome. Well, very nice to have you here, James. Toufic.
First and foremost, super bullish on the the exchange of insurance and crypto. It's going to be an extremely exciting part when a very slow and lethargic industry has to meet kind of this new world. But yeah, my name is Toufic Adlouni. I'm a lawyer. I've been practicing for about a half a decade in digital assets. Started a firm called Renno that practices specifically and almost exclusively in digital assets. We take kind of a 360 approach to digital asset law, dealing with matters as it pertains to securities, IP, corporate, AML, and kind of offshore and international structurings. We're about 25 people now, which is fucking crazy. Around 14 lawyers, and we're happy to be serving kind of the industry and supporting great folks like Joaquim and James.
Congratulations.
Yes, thank you for your continued support and expertise. So with that, let's jump into some questions. I think a good way to get it started is with some of the recent events that have happened, especially with what we've just seen happen within Coinbase and OpenSea. Toufic, I'd love to hear your thoughts on that whole ordeal.
Yeah, some really fascinating stuff is happening through the courts these days, not only in the US, but elsewhere in the world. But with respect to Coinbase, for folks who don't know, I'll give you a high-level summary. Some individuals in Coinbase were essentially convicted of insider trading, 3 individuals. They were essentially front-running projects where they would buy tokens that they knew were going to be listed on Coinbase and get a little bit of that Coinbase bump, so to speak. Obviously, what the court said, and it kind of echoes, and it's important to echo to the squad, is old scams on new technology doesn't change the scam, right? So just because you're in crypto doesn't mean certain rules apply. And this is something that we at the firm have been speaking about quite intimately for many years, is this concept of insider trading. Now, the interesting part about it is that insider trading, you actually have to prove that the asset was a security in order to be able to convict someone of insider trading, because you can't actually be trading on the inside if it isn't a security. The SEC decided to go down this route and fight them on this path, in which we can actually look at a comparison with the OpenSea one on another way in which they tackled insider trading from a different angle. But I'll get to that in a second. But the fun part about it is that all the tokens that were technically identified as in the complaint were all considered securities. So every single one of them. The court really brought us a little bit more meat on the infamous Howey test and how they're able to actually determine these things. And I think one thing that's extremely important that they really emphasize, and I'm happy that actually a legal construct that was developed amongst the crypto lawyer community has kind of made its way to the court system, is this concept of consumptive utility, right? It is critical that your token have consumptive utility in a way in which you would purchase a good or a service. Folks sometimes say, well, my token has consumptive utility. It gives you governance rights, and also you can stake it and earn dividends. And I'm like, well, my shares in Amazon give me dividends and I get to vote. Doesn't mean doesn't mean that it allows me to claim that it's not a security. So I think that's something that is extremely important, that needs to be kind of looked at amongst all projects as well. A second thing that's important as well was that the tokens that derive their value from other token holders and the efforts of other token holders shows that these network effects and these pooling of resources can also be a triggering for potential trading of unregistered securities. Last point on that, which I find quite interesting, is that there was no actual enforcement action against the tokens themselves. So they used the Howey test on the tokens to convict the 3 individuals of insider trading, but these tokens haven't been gone afterwards, or haven't been gone against by Coinbase. And if you guys know anything about listing a token on Coinbase, you always got to get a legal opinion before Coinbase lets you list. So I'm excited to see which lawyers put their letterhead on those legal opinions, and if any professional liability suits will ensue.
Yeah, most definitely, and I think there's gonna be more and more of that, which is why there's not that many lawyers that are willing to do that. So we're glad that there are some that are still around. On actually that note of regulation, will or can regulation hinder innovation and activity in the digital asset space, or do you believe it's mostly going to support it? Maybe James, if you want to jump in here.
Sure. Well, I think Toufic gave us a great example of where a lack of transparency and understanding, and I'd argue investor due diligence or knowledge can cause issues, and it can cause an issue for a whole segment. There's bad actors in every traditional post of commerce that we're used to, and there's great companies and great actors as well. So it's critical that we recognize that the narrative is going to be played against this industry at every opportunity until regulation becomes a little bit more clear. So the concerns I have about regulation are not to do with its hindrance of the segment. I think it'll actually help it. What I think we need to consider during the process, and isolating the UK as an example, they've professed to want to be the country of choice, the digital asset country of choice. So they've assembled a task force of individuals who are going to deep dive on the crypto industry or the digital asset industry, and then they're going to create a regulation around it. So when we have that, it's a good sign. The concerns are who's at the table for that council. Individuals who probably have an inherent bias related to their experience in traditional markets, and likely were not early adopters of this segment and not intimately involved with it. So they won't understand the unique profile of digital assets versus traditional securities, if you will. And that'll cause an issue, and I believe it could cause a hindrance if we don't include the proper folks who are intimately involved in the industry, professionals who can round out the perspective and ensure that instead of hindering progress, we're actually supporting innovation. And a great example of this would be the cannabis industry. What you've seen in cannabis is I think, very profound, and we forget about it. It was a legal drug, an illegal drug around the world, not long ago, just a decade ago. And today, it's legal in Canada. It's illegal federally in the US, but on a state-by-state basis, there might be some legalities there and allowing people to operate. And if we weren't allowing them to be innovative, we wouldn't have offshoot, whether or not you believe in cannabis, we wouldn't have offshoot remedies like THC and CBD, which are solving acute issues, both physical and mental, around the globe. So what I don't want us to have happen is, only look through a very narrow lens and not realize how the adoption of digital assets globally, as it relates to the blockchain and the metaverse, can actually increase innovation. And what we'll end up seeing, in my opinion, once we have a real understanding of the regulatory environment, we'll see large institutions participating, and they'll bring stability to that marketplace because they'll have traditional investment practices like family offices, investment banks. JP Morgan's a great example of this. Jamie Dimon has been loud about his disdain for cryptocurrency for a number of years. Jump on YouTube, there are amazing clips to watch. And JP Morgan has been the gold standard of financial institutions, I would say, since 2008. They've weathered the storm brilliantly. And since then, I think as early as April this year, if I'm not mistaken, April or May, he's come around and said there's value in Bitcoin, and his clients, his high net worth clients, have an interest in it, as well as his institutional clients. So what that means is we're going to have old principles and investment strategies coming in. They're going to look at a huge market, so it's going to increase their ability, their delta to develop revenues, which is, as Jack Welch would say, you receive the behaviors in which you reward. So once regulation allows for these organizations to come in, I think we'll see some stability, we'll see some transparency, and we'll also see professionals who can see around the corner from experience participate meaningfully with the entrepreneurial spirit of this industry. And I think it's a good thing for all involved.
Agreed.
Yeah, and maybe just to jump in there as well, and just to give, I agree with what you said, James, but just to give a bit of a counter narrative as well, is that, the way in which the regulatory regime is structured right now, it favors the well-capitalized, it favors the experienced, it favors the folks who can curry favor with and have certain relationships in certain governmental departments. It does not foster a incubator or a sandbox, as they may want to call it, for innovation. And I think we have to remember that every crypto startup, every crypto company was a startup, and there needed to be an impotence for someone to go and start a project. And we cannot be hindering entrepreneurs with massive legal fees because of the intense regulatory burden. We have a client that we're working with, for instance, right? They are doing, some really fancy stuff with an interesting modeled exchange, but about a big chunk of their first raise is going to have to go to legal, so we can put them through kind of the registration requirements in Ontario, because quite frankly, it's extremely onerous. And I was actually having conversations with my local regulator, the AMF, and it was a funny conversation where I obviously have relations with the regulator, and we talk from time to time, and she was stating that they want Quebec to be the center of blockchain innovation, right? They, and they can be, right? Montreal, for instance, has one of the highest student per capita. It's one of the highest student per capita cities in the world, with many extremely top class universities. Very much so. You have the the knowledge capacity here to be able to build these things. But she was like, at the same time, you guys got to get regulated, and it's freaking expensive. So I'm like,
Yeah.
oh, what is it?
Yeah.
You know what I mean? It's like, oh, we
Yeah.
love crypto.
Yeah.
Please come, but go through this, this
Yeah.
100K plus process. Right? It makes no sense. And already for an entrepreneur who's trying to move fast and break stuff, right? It's not really the way in which you're going to foster a culture of entrepreneurship and innovation. One last point on that is, a lot of times as well, it's a bit unfair, right? Where you have folks going through the regulatory process and getting regulated, but because they're so restricted vis-a-vis the unregulated platforms, they're almost like they have no teeth, right? So, why would you trade on a, insert regulated, cryptocurrency exchange here, when you could trade on, Binance or FTX and have a much more larger variety of options, services, and opportunities. It kind of, there's a lot of work to be done in the area, and anyway, we can talk more about that later. But yeah, that's my two.
Yeah.
I think there's something that could be quite interesting there, and I have seen some discussion around it, would be like a year or two of sandbox environment in the beginning of a startup. That way they have the chance to show that the model works, that it's like legit, and then at that point they have to go through the model, like an incubator sandbox model. So hopefully something like that we'll see happen soon enough. But I think as you guys both mentioned, like having clearer regulations in general around the world are going to help establish the industry and the legitimacy of the industry, and avoid more people getting rug pulled or.
Sorry, go ahead, James.
No problem at all. And Toufic, I agree with you. I mean, I'm an entrepreneur myself, and so I like the idea of moving forward. And regulation often creates opportunity. I think we've seen a lot of that, and we don't want to stifle that. I was speaking with a really impressive individual yesterday, actually, over a couple adult beverages. So the conversation got quite colorful, and they're creating NFTs for carbon credits. And now the regulators suggesting that they need to be able to KYC ILBA carbon credit holders. And this is stifling their ability to provide, I think, incredible value to the marketplace, to publicly traded companies. So they've already nailed that kind of regulatory piece down. So there are elements that we need to work through without question. And I think, again, to your point about Quebec and Montreal, I think the same thing is happening in Alberta and Calgary. They're seeing opportunities where they're saying, we want to be the future of this segment. And I think the impetus is on leadership, and I think some lobbyists from the crypto space, if you will, for lack of a better term, to push for grants, push for opportunities, because there's going to be winners and losers, I think, and there's going to be winners and losers from a geopolitical perspective as well. And this is where, I would love to see innovation on the side of government, if you will, and policy, because look at Miami. It's thriving, right? It's absolutely thriving. And the mayor's, I would say, largely responsible for that. And he's a great brand for what this could do.
To jump in on that as well, I'm really happy you brought up the point of, becoming politically active as a cryptocurrency enthusiast, entrepreneur, whatever you want to call yourselves, right? If we consider ourselves, right, a unique group, right? How many wallets exist in the United States, right? I forget how many, but it's like not a nothing number. I think like 700,000, 750,000. Significant, right? So if we come in and not lobby, I'm saying become active, actually active in politics, in which you are backing certain candidates within certain parties that are going to get the weight of the crypto community behind them, and then push them into power and allow them to make changes. The SEC, Gary Gensler, when he goes in front of Congress, I watch the hearings all the time. He repeatedly says the same thing. He's like, Congress, please give the commission guidance, right? please give the commission guidance, right? What does that mean? It means legislative action. And the SEC can only work with the laws and regulations and case law in which they have in effect today, right? They can't create law, so to speak. Even though in Canada the CSA did create law with the crypto rights contract, but that's a whole other can of worms there. But they can't in principle create law. So you must rely on political action. And just to bring it back to cannabis, and I know, Joaquim, you're going to hate me, but this is in a past life. This is in a past life. But I was part of the Young Liberals of Canada. I was the vice president here in Canada on the national level when we got marijuana legalized. And come find me in Futurists. I'll talk to you, and I'll explain it when I'm speaking Futurists as well, is how we were able to take, an idea back in 2008 as a group of young individuals and push the legalization of marijuana through the Liberal Party and make it party platform and force Trudeau's hand that he had no other option but to actually make it into legislation. And that's how you can actually enact change within the party. And I can, and being someone who was in politics for 8 years, I can speak about this in verbatim. The last point, just remember, liberals in Alberta, in Canada, they all get conservative party cards because they know the Liberals are never going to win. So then they pick the more left-leaning conservative. Just think about that.
Yep. To avoid going into the politics thing, the politics side of things.
I know you were about to come and attack me, but you know what?
Actually, there's something that James, you mentioned that was that I thought was interesting, and I guess it's a bit on this subject of bringing in regulation, which is that it's the councils in the end that help determine what the regulation is going to be, and the people sitting at that table. I think that there are some interesting movements happening in Canada and around the world in terms of putting those types of quote unquote lobby groups. But at the same time, like even those people, we really have to have people that are understanding what's going on a day-to-day basis and what's coming. So for example, there are some things that even the most experts amongst us are having trouble wrapping our heads around. So an example of that I wanted to bring up today and see what your thoughts are on the upcoming ETH fork that I do believe is going to happen this time. I think that as we move from ETH proof of work to proof of stake, it's going to be a hard fork. There's some people that are showing that they're going to be interested in continuing to run the proof of work chain as well. And so every single smart contract on Ethereum is about to be, essentially doubled, some of which might be held on both ends and continue to be worked on both ends. So how does that work from a regulatory standpoint, especially, let's say, for stable coins or any of the other currencies as we're going to be entering this extremely complex time for the Ethereum chain?
Yeah, it's an absolutely fascinating time, and it's something that I've been kind of watching for a number of years. I think there's something to keep in consideration around the investment contract test, the Howey test, right? And it's that it is not the asset itself that is determinative to be the security. It is the actual relationship around that asset that creates the investment contract. So the Howey test, if you guys know anything about it, was a guy selling interest in his citrus farms in 1946 and giving profit from that. He could have sold citrus to you and you could have resold that citrus. That's not a security, right? But the fact that he did it in that way, the way in which that project was packaged was a security. So is the way in which Ethereum is packaged right now going to change? And I think the determinative aspect of it is going to be the fact that proof of stake equates to pooling of resources, right? And the pooling of resources that are mostly going to be on the effort of others. I think Ethereum got it pretty lucky because it launched so early and was able to maneuver itself within the regulatory environment at such an early stage where no one knew what the hell was going on, and were able to get away with almost a carte blanche. But if you dig deep into the Ethereum structure, into the Ethereum governance structure, about how the Ethereum Foundation works, you understand that, it is not as decentralized as you may want it to be. Hell, there are people working on this project and there's someone kind of leading them, so to speak. So there are red flags for Ethereum. I know that they've stopped short on saying that Ethereum is a full-blown commodity and writing it off like that. But again, the courts have been serious. You can have, Ethereum proof of work be a commodity and Ethereum proof of stake be a security. And it's going to be a case-by-case situation on how that contract in which you purchase Ethereum or in which you made a certain return on profit, that is going to be the determinative factor and not the asset itself, which is super confusing, but I hope I tried to make the most sense out of it.
And to make it even more confusing, to jump in very quickly, actually something interesting that I've heard and we've been discussing internally within the company as well is that with the Ethereum moving to proof of stake, it's actually the strong chance it becomes the first global decentralized digital bond, because essentially just by holding it, you're able to secure an annual interest rate. So on the contrary, instead of it being a security, it could actually be considered a bond, meaning also a commodity. So it really depends.
Well, a bond is a form of security, right? So you're back at square one. You're back at square one anyway. But that doesn't mean that if you're building projects on ERC20, does it affect the projects that you're building on ERC20 or on ERC 721? Like it is a case by case. So you need to kind of really look at your situation and what you're looking to do. But again, back to that Coinbase decision, consumptive utility is the thing that you're really going to have to kind of concentrate on going forward if you're going to try to sneak to claim that your token is a utility.
Interesting. James, anything to add here?
I think it's interesting to consider the parallels between digital assets and traditional finance, because when you're talking about securitization, you're treading on pretty thin water. And when I think something like that is up for interpretation, back to the point of the old council, they're gonna go towards what they know best and where they're gonna reap the most rewards, and that's the concern. So talking around what do you need to do before you consider this? Is it the founders and leaders of this organization's decision based on own financial reward, or are they trying to support the industry as a whole? And I think understanding what the perspective and long-term strategy behind it is. Do we want access globally, or do we want to mesh with traditional capital markets, traditional commerce, traditional finance? And that's where you have to get a good group of people around you, good lawyers, good advisors, to say, listen, we're going to go down this path, and here are a lot of the potential risks of kind of falling into the regulatory burden that is unclear right now. And that's just what's happening.
Yeah, 100%. Like, I think a big part of my job really is, being a legal architect, right? In the sense that, you say, well, I want to do this. This is where I want to go, right? And, I'm supposed to help you build that path there, right? And there's a lot of horse trading, right? Sometimes there are things that you're going to have to change about your project. Sometimes there are things that may be technical violations but low execution risk that you may need to live with, right? And there is a way in which you can build these projects, and I think this is why having a lawyer who has that architect kind of mentality in mind and is looking to build the project with you is where you start getting value add from your lawyers than just the cost, a cost on the balance sheet.
I can attest to that. I'm fortunate to be an advisor for a few companies. One's a public company and one's a private company in the space. And we talk about what we're doing all the time. And we recognize there's a changing landscape from a legal and regulatory perspective. And that's just, today. We don't know what's going to happen tomorrow. Who's kind of thinking about what? So the goal here is to have a strategy that there's an ongoing feedback loop where you've got all the professionals, locally and globally, quite honestly, that can give you the best information up to date. And you've got to make a decision as you go. And sometimes they're pretty big decisions that have to be made pretty quickly. And you can kind of, lament about it later on, but there is no choice because you're moving forward as an entrepreneurial industry and as an entrepreneur within that space. And I think the greatest probability of success is having as good information as you can and make that decision as quickly as possible. And the low execution, when you talk about low probability, I think it was low risk, high execution.
Well, yeah,
it's a great place.
There's certain situations, and this is one thing that I do in my practice, because I can tell you this is a violation, right? But you always have to look at it vis-a-vis execution risk. And when I mean execution risk, I mean the regulator executing and enforcing against you, right? So that's something that I think clients should know. Like, what is the risk chances, right? Is it 10 out of 10? Is it 1 out of 10? I will tell you one thing.
Look at Uber. You bring up a great example, and Uber is, I think, the classic example, and at least as of late, where they were operating in an unknown gray area for a number of years, and even from an insurance perspective, we weren't really clear on what they were doing to protect their drivers. And slowly but surely, they kept getting slapped on the wrist. They go public, right? They've got we don't want you in the airport. Now they're in every airport being advertised. And so, to your point, you'd hope they had good legal counsel, good advisors telling them, listen, this is what the slap on the wrist could be, or they're going to make an example of you.
If BlockFi spoke to a traditional lawyer, they would have said straight up, don't do it. No, don't even try. But they just got not with the news story, but like last year they got $100 million slap from the SEC, but they were making 600 million in revenue, right? Yeah. So is that cost of doing business? That's up to you. I can't decide, but
that is, I think you've highlighted a really important perspective on the space and the advisors around it, especially the fact that we're talking about a family office business who's going to be investing in not just the asset class, but I think in projects, if you will, but let's call it companies. They're going to want to know that there's a good group of advisors around, and these decisions are going to be, bounced around a table or over Zoom, and there's going to be some really salient points made. And the decision is going to have to take into consideration real risk, right? But to your point, how real is that risk to the reward? And we're seeing a lot of that right now, and that's why we're here today. I mean, these decisions have been made for a number of years now to get us to this point. And we've seen it in other industries, and it's going to continue on until regulation becomes more clear. And by the way, even when regulation is clear, it's not completely clear. That's why there's lawyers drawing up contracts and dealing with issues. So these types of challenges will be ongoing. You just need to make sure you've got a good group around you, and the feedback loop is very, very clear. Entrepreneurs can get really stuck in bursting through the wall. I know this personally. Toufic, I know you do as well. So there's got to be people around you that you're willing to listen to. And then you make these decisions and you get to where we are today. And I think that's the moral of the story from my perspective. That's the mindset.
Super interesting, guys. So many things to continue to stay on top of within the space. And as you mentioned, I mean, I don't think it's possible to stay on top of it all. So surrounding yourself with all of the right people that are experts within their fields is probably the best way to do so. And you just keep navigating your ships. So on that note, unfortunately, we're going to have to bring it to an end. If anyone has specific questions for Toufic or James, feel free to reach out directly via the chat, or I'm sure that you can also connect on LinkedIn or other platforms. I'll also add mine here. Feel free to connect, and have a wonderful rest of the Family Global Office Summit.
Thanks, Joe. Thanks, James. Pleasure to see you both.
Thank you, Joe. Toufic, first class. Tally, great work today.